financial planning firm. We have offices Grand Central as well as upstate in Rhinebeck. We handle small businesses and individuals. Our team consists of both enrolled agents and certified public accountants. The difference, the enrolled agent designation comes specifically from the IRS. So the exams come from the IRS, and there are 3 types of professionals that can represent clients across the board for audits: CPAs, enrolled agents, and attorneys. So these 3 professions can be put on a power of attorney. The enrolled agent designation is actually older than the CPA designation. It just happens to have a lower power lobbying group. That's why you don't know as much about it. But it goes back to the 1800s, the designation. Again, it's more of a tax specialist. The tax rate in the future on the Roth is 0. So if you can provide me something that tells you your tax rate is going to be lower than or equal to 0 in the future, now you have an argument. The dollar-to-dollar benefit of what you're actually deducting, and the benefit of what you're deducting, is really what your tax rate is. So if you make a $6,000 contribution and you're in the 30% tax bracket, it's $2,000 of savings today, if it's deductible. If you don't take that deduction, if you forego that $2,000, you make a Roth contribution, that $6,000 over time turns into $100,000. You're not pulling $100,000 out tax-free. If you're in that same, even if you're in a 15% tax bracket, that's $15,000 of tax compared to 0. So I don't think every situation is the same. I think that every situation warrants a specific analysis. However, 0 tax rate in the future is pretty hard to argue, I think. Effective tax rate was 11%, just over 11%. So part of what the tax cut did, corporate tax rate came down to 21%. Now, we'll talk about it in a little bit, but there's a difference between a marginal tax bracket, bless you, and an effective tax bracket. So your effective rate is your average rate, blended rate across the board. Marginal is the last dollar taxed. So some people say, I don't want to get into the next bracket. How much money do I need to earn to not get into the next bracket? That doesn't mean that all of your income below that is now taxed at the higher bracket. It means only those dollars above that range is taxed in that bracket. So 379 profitable Fortune 500 companies paid 11% in tax. Their profit, $766 billion. They paid 11%. Joe Biden wants to reverse the Tax Cuts and Jobs Acts, go from 39.6, so what the old top rate was, go up from 37 to 39.6. He wants to provide an $8,000 tax credit for individuals with children in childcare. So anybody here that has kids that work, your kids go to daycare, there is currently a dependent care credit. The dependent care credit is $600 per child. This, an $8,000 credit for individuals with children in childcare, is a significant benefit. Again, nothing on this page may or may not come true, but it's either courting voters, it's looking at policy, it's looking at who benefits. Some of these actually may have some traction. Tax capital gains at the same rate as ordinary income. So currently capital gains are taxed, long-term capital gains are taxed at a preferential rate. 15% if you're in the lowest brackets, 20% if you're in the top bracket. And he's talking about this wealth tax. 2% on every dollar of net worth above 50 million, 6% on everything net worth above $1 billion. So could be peanuts to people in these, this is change to some people. The question is, how is it going to be, what are the mechanics to police this? Everybody files a tax return. Tax return just shows income. It doesn't show your assets. So now does everybody have to file a personal financial statement? Is there now benefit to Elon Musk, as an example, who just had a significant increase in his value? Does he now want to artificially decrease his share price because that means he's going to pay less tax? I don't know. Maybe. There may be other business owners that may consider that type of scheme, if you will. Is the benefit the taxpayer? Is it benefit the business? Is the benefit the shareholder? These are all things that have to be considered. So something like that. And so now we can talk about Bernie's situations. He wants to repeal the 199A deduction. If nothing happens, that's going to be repealed automatically on its own. He wants to also eliminate Social Security cap. He wants to create, again, we're talking about a progressive wealth tax on income over 32 million, assets and income. So again, you have to prepare a balance sheet, you have to prepare a tax return. Very, very difficult to get across. What is pretty common, again, capital gains being taxed at ordinary income rate. This is the carried interest provision that we talked about earlier. So this one is pretty consistent. This one may actually have a little bit of leg.